What's up guys, Bill here. In this video I'm going to revisit a video from 2 weeks ago on episodic pivots. If you haven't seen that video yet, you're going to want to watch that before this one, otherwise some things are just going to not make sense to you. So I'll drop a link below, check that out, and then come back to this one. In this video I'm going to review the 6 trades on this setup I've taken since posting the last video. 4 winners, 2 losers, and we'll talk about some of the things I've learned playing this setup. We'll review how you execute, and things to think about in the future when we're getting ready to play these with regards to maybe how high confidence we see the move continuing to be, or how much of a move it can make that day, maybe how to size accordingly, bigger in certain scenarios, smaller in certain scenarios, all that good stuff. So we'll start with SOFI here, and I'm going to kind of go in chronological order of the earnings cycle and when I played these. SOFI was the first one I played of the 6, and nice gap up here. The big story on SOFI, the new episode, as you could say, was that they had their first profitable quarter, okay? And things I'm going to be thinking about when I'm playing these setups, there's 2 major things I'm going to be focusing on, aside from stuff that's mentioned in the first video, all the technical aspects of the trade and when you take them and when you don't and all that. I'm going to really pay attention to where we're gapping to on the chart. As you can see on SOFI, we're going to open here. There's a big bear gap right here. Now, that doesn't mean you can't fill this gap that day or even blast through it, but it's just something to consider because these gaps can act as resistance. This is a bear gap. Bull gaps would act as support. You're going to get a little bit of a fight probably where the gap starts, and even more so when it comes close to filling or fills. They often tend to act as resistance, right? So that's something to think about when you open here. You got some decent headroom still. You can scale here and then try to eat your way through the gap and definitely be close to all out by the time it fills. So that wasn't too much of a concern, but there is one thing to think about on SOFI. If you're going to try to swing an EP, which some people do. I haven't done that yet. I've strictly day traded them, but SOFI tends to sell off after a good earnings report. If not the same day, the next day. So let's look back at the last couple ones. This one, we gap up, we get a little more of a pop, and then it sells all the way back off. The earnings report before that, we get a really nice gap up, 20% day, but the next day, it gives it all back, and it keeps giving it back for an extended period of time, and even goes, negative from there. Okay. So I knew I didn't want to swing this name. All right. But it's not going to stop me from trying it on a day trade, but I'm not going to go huge size. Okay. Because we got this gap to fill, and I'm going to be a little more aggressive taking profits than maybe I would on some other names. It also has a large float. Okay. And that can be something to keep in mind. A name like SMCI, we all know, or if you don't know, that's been on a tear lately ever since it came out with insane raises of their guidance, has been on a tear, sub $100 million float. SOFI, almost $1 billion float. So huge difference, a lot more, a lot harder to really rip for days. But let's come down to the 1 minute on the 29th. And we'll look at how we execute these trades. We're going to be wanting to play. Why didn't it go to the 29th? Oh, sorry. That's my fault. It should be January 29th. We're going to want to play the 1 minute opening range break. So here's your 1 minute candle. You're going to mark the high of that candle, and that's going to be your call trigger. Okay. Whenever that triggers, which in this case, it's the next candle, which sometimes happens, but not always. Whenever you get in this trade, the low of day at that time is your risk. All right. And the way I'm playing it right now is if we close a 1 minute candle back below this level, I'm out. Okay. For either a loss or maybe, I've taken profit and now the play is invalidated. Either way. That's what I'm doing for now. And that may change because honestly, guys, I've played about 10 of these. I've won on 8. So I've only had to stop out twice, and I'm still trying to work through what the average loss is going to be or what's appropriate based on my average win. Right now, my average win is around 120% and my average loss is 50%. So I don't know if I need to tighten up that loss more or what. It's going to be a work in progress. But back to the execution, we get this nice push through. You're just entering on the momentum. You don't need to wait for a close. I haven't waited for a close yet. But you can see what's great here is 1 minute opening range, really nice respect. You get a nice initial pop, enough to take some profit for sure on that first push. And then it comes back, retests it, holds it. It makes a new high. I've been finding a lot of luck in using the 9 and 20 EMAs, even on this 1 minute, to kind of judge the trend and see if you can ride it a little bit. This one isn't super clean. And part of that may be what I was talking about earlier when we were looking at the daily chart, things like how big of a float it has, coming into this gap resistance and all that. But not a bad trade. I think, if I remember correctly, it was probably the smallest winner of the ones I won on in the last 6 trades. I think maybe topping out around 60% or so. The implied volatility was really high, and that crush kind of hurt the contracts. It made it a little bit of an uphill battle. But you can see that it got a nice move, and it never even came down and invalidated ever. So you really could have figured, if you wanted to, held these all day. But as I talked about, I'm not interested in swinging that setup because of its history of kind of selling off the day or two, a couple days after earnings. All right. The next one I played was Meta. Meta, its story was that it was going to offer a dividend for the first time ever, which is huge. And it also was going to increase its buyback. And investors really liked that. And we got a massive gap up and into all-time highs. All right. So with this one, we're not really having to worry too much about gapping into a resistance or anything like that, like we did with SOFI. We're more so needing to look back and say, okay, what kind of move can we expect on Meta? I mean, it's gapped up quite a bit already. So what I did was look back at its earnings from February of 2023 when it announced the buyback and got a really nice earnings pop. It had a 23% day. So I kind of used that to say, okay, well, we can expect maybe something similar to that. Meta ended up having a 20% day. Obviously, there's, wicked up higher than that. So that gave me a little confidence that, hey, we're opening here sub 20%. It could probably have a 20% day based on, previous reactions to similar situations. And so that's kind of gave me the confidence to size up a little heavier and try to hold through targets. So I was just using Sykes and things like that. But let's go and check out the 1 minute on the 2nd of February and look at that, how that execution played out. Here's your first 1 minute candle. So we're looking at a little bit of a pullback. And honestly, this is kind of what I like, guys. I prefer with these EPs that it sells off a little bit at first and people take their profits and stuff like that. And then we can come back in on the momentum and the reclaim. So we're in here on this push through, right? Momentum, nice respect, holds it. And then we start to get our legs up. And in a situation like this, right, we're at all-time highs. Triggers 463, 470 is a great first target, even it depends how aggressive you want to be. The thing is with these setups, guys, is you can see the more you play them, the potential winnings are hundreds of %. 4, 5, 6. I mean, sometimes more. It just depends. You don't want to be taking profits super heavy at like 50%, 75, right? As long as you're accepting a decent risk, low a day here, 50% or something like that, you're still able to bake in at least a 2-to-1 risk to reward, by being a little more patient and trying to hold these longer. Okay. So 470 is a great spot. 475, we can see that we got all the way up there, right? Just using those Sykes on an expensive name like Meta, $5 Sykes. On a cheaper name like SOFI, it might be 50-cent increments, okay? but that's, that's how you play them. And we're looking at these EMAs. It comes down, tests, holds it, gets a new high off of it. A little choppy here, it still makes new highs. Meta was a really good one, several 100%, and just kept running and running and running. Okay. Ended up at 486, basically, pretty crazy. But that's Meta. Next is Palantir. Palantir was a great one as well. We gapped up here. And Palantir, it has a little bit of a resistance spot here that you want to be concerned about, but we're really far away from that, right? Over $1 on a cheap stock. So that's not a major concern for why I wouldn't play or size heavy or anything like that. It's a spot you definitely want to take profits. And as you can see, it's right where we ended up closing that day, which is, I don't think, a coincidence. But it's just something to look at. And it ended up being its highest volume day ever. A lot of these names had. SOFI was even its highest volume day ever. But Palantir was as well. And one thing I learned about Palantir that helped me on day 2, actually, was by looking left, was it likes to have a nice strong second day when it has a good gap up earnings day. So you can see here, back on its last report, gapped up 20%, had a nice 5% day the next day. Earnings here, gapped up 23%, had a nice 4% day the next day, okay? So that was something I kept in mind, and it blew those expectations out of the water. I mean, I was happy with it having a 5% day the next day. It put in 8, right? But let's zoom in down to Palantir on the 6th on the 1-minute chart and just go through this execution again. The more comfortable you get with it, the better, and the more you see how it works and it's respected, it gives you that confidence to hold and play these. And they've been very profitable for me. First 1-minute candle, high market. Get a little sell-off, kind of like Meta. I love when it does this. I love a little sell-off and reclaim for our entry. We get in and we just ride. 21 psych, good place to scale. Comes back, holds the 9, holds the 20 for the most part, but the 21's right here. This is GEX, positive GEX, support and resistance, right? We're trying to flip it into support, and it does. And makes a nice move up to that pivot that we showed on the chart, on the daily, right? This is where it kind of rejected. And then later in the day, we actually break through it and get another nice pop, but close right at it. Okay. So just smooth. A lot of these are very smooth, and take profits when you're happy. Try to let them ride. Try to use those EMAs as much as you can. With plays like this, you got to be okay holding some runners that maybe at some point you're up a couple 100%, and at one point you're maybe only up 50, and then they come surging back, right? And now you're up 500%. You got to be okay with some of these fluctuations, and it's easier to be okay with them when it's a small percent of your overall position, right? So usually for me, my overall position might be 15% of my account on some of these plays, and the runners are just 10% of that. Okay. So, 1.5% of my account, nothing too crazy. But that allows you to stay in, and with just that little bit of that position, instead of selling it all for 100%, if you can hold on to them for 400 or 500%, you can really add some, extra, P&L to your account just on that small fraction of your position because of the power of these setups and how explosive they are. And especially when you're playing options, that's the name of the game. You need to maximize your winners as much as possible so the losers don't affect you as much. That's Palantir. Last one, and this was kind of the king of them all lately, very similar to SMCI, was ARM. ARM's a recent IPO. It gaps into new all-time highs. Extremely positive forward guidance. And 90% of its float is locked up by institutions. So kind of a perfect storm here for a move that can really go. Okay. It gapped up huge. It was up 20, almost 30%. I believe about 20 when it opened, ended up having a near 50% day, guys. These are the types of trades that I'm talking about. And obviously they're not super frequent, but by being patient and trying to hold your runners and things like this is where you have 1,000%, move on runners, right? That can make your month or, in some cases your year, even depending on what your trading goals are. But just massive, massive, massive move. And let's zoom down to the lower time frames and watch this and watch how smooth it is for something that makes this big of a move. Is very impressive. All right. Here's your first 1 minute candle. It's not messing around. We're just going from the open and never looking back here. Okay. So we open at 94. Play triggers. Look at the 9 EMA on the 1 minute. It's textbook. It's so smooth. Some selling here on volume, but it never loses. The buyers step right back in. Boom. Look at that stick. 126. $32 move in 37 minutes. It's moving $1 a minute, basically. I mean, this is the type of thing. This is maybe a once or twice in a year opportunity, right? To get in something like this, that's this smooth. Why panic sell? Yes, scale along the way, right? Scale at psych levels on a name like this every $5 or so. But you gotta keep holding something until you see anything that resembles, okay, maybe we're in trouble. Here's some selling. We start to lose the 20 EMA. Maybe that's a place you're like, okay, I'm out now or whatever, right? But, you're never going to nail the top of every trade. You're never going to have runners till the very end and maximize to 100% every trade. But you got to employ some type of technical analysis or system to keep you in these trades longer than here's your breakout and you're all out here, right? For $7 when it goes 30. You can't do that. It's going to make it harder to be profitable and your losses are going to hurt you more. They're going to take your profits back, right? And, we pretty much topped out there. But that was the trade of the, one of the trades of the year. That and SMCI, if you were able to catch those, both EPs and both huge winners. You can make your whole year on that. All right, let's talk about the 2 losing trades that I took on these setups. First was CFLT. I had never traded this name before, but it had a really nice gap. And, you look at the candle, it's like, how did I lose money on this? Well, basically, it just, from where it opened, it didn't have a ton of headroom till this daily pivot, but honestly, I kind of consider it a minor daily pivot. It's not super huge daily pivot. It's good. But I had it marked. And it was up quite a bit already, right? And there's really no history of it doing that. So it was a little tough to find big moves on it. The only big move it had was to the downside, which shows that it can have crazy earnings range, but we haven't seen that range to the upside, only to the downside. So those couple things were a little bit concerning. And it ended up being a loss for me. So let's go down and check the execution on this. Let's see, 2-8. Here's your first candle. And you can see here that this is part of the problem. This is that daily pivot we talked about on the, on the daily chart, obviously. That's the pivot. And we're pretty close to it at the top here. So we get this move. I get in here. We get a nice pop, but not really enough to take any meaningful profit, right? And at the time I'm entering, here's your low a day. Not enough of a pop for me to really take any meaningful profit. If I'm willing to accept a 50% loss, I'm not going to be taking profits for 30, 40%, right? We get the pop. It has trouble with this daily pivot, sells all the way off. We get a 1 minute close under low a day, and I take my 50% loss here is roughly what it was. Okay. Simple as that. that's just a losing setup. And so looking back on it, reviewing it, if my opening range high on the 1 minute is this close to a daily pivot, I'm probably not going to play it in the future. Okay. If I do, it'll be smaller size. But I'll probably just avoid it. Okay. Especially after, it was up almost 30%, I think, when it opened. That's a lot. I think a part of the reason I did play it was that these have been so hot that it's just like, just keep riding it until it doesn't work. It didn't work this time. All right. The other losing trade I had was CLSK. Clean Spark. Another name I'd never traded before. Nice gap up here. Ended up being its highest volume in history. But a couple things that were concerning again on this one. Really major daily pivot here, which we were opening pretty close to. Also, this name is, it's a miner. It's a Bitcoin miner. So it's very dependent on Bitcoin's price. At the time, Bitcoin was breaking out crazy when market opened, which actually had me excited. I was like, okay, well, this thing could really go today. It's already up quite a bit. It's got great volume, nice report. I think part of their report was saying they were going to have their first profitable year or break-even year, something like that. But, a major, bullet point. And Bitcoin was looking good. Well, Bitcoin sold off the market open right away and kind of screwed this up. But that daily resistance was there too. And I heeded that because of my loss on CFLT, and I played it, but I played real small size, only 5% on my account, because I was worried about that daily pivot. So here's our first 1 minute candle. And at the time I enter this trade here, there's our low of day. As you can see, it tests the daily pivot and is immediately smacked down. But it doesn't invalidate. We don't get a close below. It comes back for round 2. I was really thinking we were going to break out here on this second chance. But they smacked it down even harder. And on the level 2, they were stacking like a couple 100,000 shares on the ask. And I saw that, and was like, oh man, this is probably not going to end well. And it did not end well, and it flushed. And I took another 50% loss. It ended up closing the 1 minute candle below here. I think I had to cut a little before that because I didn't want to exceed a 50% loss. So I probably cut around here. It could have maybe been a 60, 70% loss if I would have let it. So yeah, like I mentioned earlier, as far as the losing trades of this go, I still need to figure out the exact way I'm going to cut these because I haven't lost on many, only 2 of the 10 plays I've done. I don't know if it's going to be a hard percentage or if I'm going to be able to trust this low a day. It's just going to depend on the contracts. I've been playing weeklies, right? If I start to buy more time, I could probably play the closes and not take as big a losses. My wins won't be as big either. So it's just something that's a work in progress, right? I've only traded this setup 10 times. So there's a lot more data collection and experience and reps I need to put in. But right now, it's by far my favorite off the open momentum strategy. I'm loving it. The winning trades are so big that it just really, it's really worth it to me. So hopefully that helps, guys. If you have any questions about this, just leave a comment or find me on Twitter and I'll help you out.